welcome to Markets IQ. I'm Hiral, Dadia. Clearly, we have a Jyoti CNC which has listed on the bourses currently 18 to 19% up move. We've listed at a premium of around 12.4%, and this is on BSE. So that's with regards to where the new listing is concerned. Jyoti CNC, an interesting move coming in on that one. 370 rupees is what the price is with regards to where NSE goes. Now, clearly the markets were absolutely upbeat as well if you talk about in terms of where listing goes. The price band at the upper end was around 331. So those are visuals that we are getting from NSE where the listing has taken place. So live visuals coming in from the National Stock Exchange. But that's Jyoti CNC currently trading at levels of around 400. 21%, so a good move coming in there. The total offer size was almost around 1,000 crores overall. So that's with regards to Jyoti CNC automation. Clearly, it's very interesting because the management had clearly indicated that the money that they have raised, majority of it will be used to repay debt. And one of the clear positives that you see out of that is that the finance cost, which was absolutely high over the last couple of years, that goes down and clearly translates into profitability, right? So that's one of the key positives that the street has been watching out for in terms of where Jyoti CNC goes. The order book absolutely is healthy, so the revenue recognition over the next 2 to 3 years is expected to be strong. And the sector that they are concentrating on is aerospace and defense, and as we all know, that is a sector which is an absolute high growth sector with the kind of focus that the government has on it as well. So that's with regards to Jyoti CNC. A premium of little over 12% on BSE is what we've seen currently. The volumes are at around 10.3 million. 400 is where the stock is trading at. But before we head across to the management, let's quickly take a look at the overall markets as well at 10 a.m. What's it looking like? Let's just pull up Nifty 50 on the screens. A pretty flattish move, but it's interesting to see how we are maintaining above those 22,000 levels as well in trade today. Let's pull up Bank Nifty as well because clearly it's the IT pack which is driving the rally. So a 5-day chart of the IT index also will be interesting. But Bank Nifty above 48,200 with gains of around 0.1% coming in there. So mild outperformance from Bank Nifty vis-a-vis the benchmark indices in trade. Broader markets are also interesting. So mid cap and the small cap index, if we can have that one on the screens and see what's happening on that front, and a 5-day chart of the Nifty IT index to see the kind of gains, because that is what is propelling the rally in the markets. But is it time to see profit booking? That's the key question that everyone is asking. And what next after 22,000? IT index in today is down around 1%, so some bit of profit booking coming in today's day of trade. But let's just quickly pull up a 5-day chart as well. There you go, 5.5% up move coming in with regards to Nifty IT as well. Overall, in terms of contributors, if we can have the contributors of Nifty 50, that will tell you, what's happening with the stocks. You have HDFC Bank that will be reporting numbers as well in today's day of trade. So that is going to be an interesting counter to watch out for. But if we can have the components, there you go. Major contributors to today on the downtake, you have HCL Tech, Infosys, HDFC Bank ahead of numbers is trading under pressure. Reliance Industries as well is seeing some marginal cuts. However, Bharti Airtel is an interesting one today. You have a report on that one. Bajaj Finance, ONGC, as well as Tata Motors are a few of the other counters which are upbeat. Moving from here on, let's pull up the broader markets, the mid-cap and the small-cap index. Those are interesting ones to watch out for because clear outperformance coming in on that front as well. In terms of stock-specific action, overall, the railway pack is looking absolutely strong. Second consecutive session where we are seeing some smart moves coming in on that one. So names like Atithagar, Texmaco, IRFC, IRCTC, all of these names are seeing some pretty good moves in today's day of trade. There you go, smart moves. In fact, Atithagar Rail as well, you have a systematics which has initiated coverage on the counter. So a target price upgrade that has come in on that one. ITI is interesting, 14% up move coming in with regards to where ITI goes as well. Aster DM is another one which is in focus. So that's with regards to where the markets are concerned. Hello and welcome to NDTV Profit. I'm Hiral Dadia, and one of the IPO that has listed today is Jyoti CNC Automation. Joining us on the show is Parakramsinh Jadeja to discuss more, who's the chairman and MD. Parakram, good morning and congratulations for the listing.
Very good morning and thank you very much, Hiral.
Parakram, my first question coming to you is, clearly with regards to where the IPO goes, the object was repayment or prepayment with regards to borrowings, funding the working capital requirement of the company. Now, if you talk about the prepayment and the repayment, how much have you paid or how much are you going to pay out of it? And secondly, what does that take your debt to equity to?
So Hiral, basically out of this IPO prospect, we are going to pay close to 475 crores to debt, and after this paying of the debt, our debt to equity ratios is 0.25, less than a 0.25% over there.
Okay. And is that a comfortable number, or there will be future plans to repay further and become debt free completely?
It's quite a comfortable number, but our direction is to be a completely debt-free company in the next 2 to 3 years there.
Right. Another question I have is, because majority of the proceeds are going to be to repay the debt, now that certainly will reduce your interest cost as well. What's the kind of impact it could have on the profitability? Because I'm sure it's going to be positive. So how much upside are you seeing?
So basically, in terms of our finance cost, if you look at that in the past year, is close to 90 crores, and we are paying almost, let's say, 60 to 70% rates we are paying over here in this end of this year. So definitely you can calculate based on close to, we have a annual base, we have a close to 55 to 60 crore savings will come over there.
Okay. And with regards to the order book, where does it stand, and what's the kind of revenue visibility that you have from the current order book?
So basically, our order book is very robust. We have close to 3,300 crores of order book, and that our commitment towards to deliver to our customers within 2 years' time of that.
Okay. So will the entire little over 3,000 crores translate into revenues in FY 25-26? What will that breakup look like?
So basically, let's say this year we will have some numbers will visible to be here. FY 25 we will have a large number will be been executed there. And some of the numbers will be, let's say, out of this order book, close to 20-25% will be left out for a 25-26 there.
Got it. Overall, if you see in terms of the order book and the segments that you operate in is pretty niche, and majority of your revenues come in from the aerospace and defense industry, which is absolutely robust at the current juncture with the way the government is increasing their spending. The growth sector, the sector is absolutely growing. Overall, what does the bid pipeline then look like?
Yeah, the pipeline is very robust. We are discussing with the many of countries are coming in terms of investment is going on defense sectors there particularly. Even after the COVID factor, let's say all the aerospace industries is coming up very nicely, and all the worldwide people are increasing their fleets and all. So we are expecting, let's say, this momentum will be at least minimum 5 to 7 years are clearly visible on a aerospace and defense area.
Got it. Another question, Parakram, I have is that on the back of the losses that have been incurred in the past, the return of equity in the past has been negative as well. What's the trajectory expected to look like, number one? And secondly, if the losses continue to an extent, how will the dividend policy shift?
See, basically, already you have seen our half-year numbers. We already break even, and we are becoming profitable there in on H1 number itself. And the way we have a robust order book and we are going to execute in coming this quarter on quarter, the numbers you will see that some good numbers are coming in the coming days over there.
Okay.
And we will set accordingly to our future to be all policies to be there.
Got it. Overall, from the cash flow perspective as well, what is that expected to look like? Are we in the positive already, and you'll be able to maintain a free cash flow positive number for a longer period?
Absolutely. The way we have a capacity inbuilt over here, capacity utilization will come in the next 2 years completely, and we don't have a much on a capex side, and even though we are improving our working capital cycle also, so there are going to be a free cash flow available that will be available for the future growth funding to be there.
Okay. And from the agreements that you have as well with your customers, what is the, what are the kind of contracts you have? Do you have long-term or short-term? That's number one. And overall, from a capacity perspective, where does the utilization stand for you?
So basically, all the customers always to be in the capital goods and particularly the machine tools. The customers are a very long-term based customers. Let's say today, I have a customers who has bought a first machine also in 1999, and since they are our customers, so it's a long history. And even let's say a subsidiary company, we have a customer relationship with more than 100 years with the customers there. So it's a very long relationship to be there basically.
Okay, and what's the current capacity and where does the utilization stand?
So basically in our current capacity we have a close to 4,400 machines, and we are debottlenecking, we are doing in this year and going to reach out to be within let's say next 1 year time we are reaching out to be close to 6,000 machines, and we are going to utilize close to 85 to 90% in the next 1.5 years now. In H1 we were at a 50% of utilizations over there, near to 50% there.
Okay, so at what level do you think you will have to look at a capacity expansion, number one? What is the plan on that front? And two, how do you plan the capacity expansion as and when you will look at it?
So basically you have to look at this way that the plant as such a way has been installed. This is phase one. In phase one also, after some of the bottleneck been removed, we are going to reach out to close to 6,000 machines, and we are going to execute in the next, based on this our order book, we are going to execute close to a 90% of executions are going to be happening in the next 1 year time there. And this is a phase one, and based on that, the way the EMS industries are growing, the way the order book is growing on EMS industries, we are fully prepared to further grow and expand our capacity on 25-26 from this level to another different level to be there.
Right. And very lastly, Parakram, what's the outlook looking like, in terms of growth for top line and bottom line and the margin picture, if you have to look at FY 24, 25 and 26?
So thank you, Hiral. The growth numbers are going to be, let's say now within 3 weeks you will see the third quarter number. You will able to visualize how the percentage of growth and how the things are going forward over there.
Right, but will you be able to maintain the last 3 years CAGR, or will it be better than the last 3 years CAGR growth?
Yeah, we are able to, we are expecting based on this, if you look at them based on our order book, we are going to cross that numbers basically.
Got it. Thank you, Parakram, so much for joining us on the show at NDTV Profit. And once again, congratulations for the listing. So that's the management of Jyoti CNC Automation on the day of listing.
Thank you very much.
Always a pleasure to speak to you. So that's the management of Jyoti CNC Automation giving out their view with what the future holds for the company and the sector. That's all that we have on this session at NDTV Profit. Thanks for watching.